Also YouTube live?
Yeah.
Yeah,
It's already done. I think we are live on YouTube as well, and
just make
the
Siddhant as
recording also started.
co-host.
So, Siddhant, I think, yeah, Siddhant needs to be made the host. 1 second.
And also Arupta is co-host.
Yeah. Yeah, both are done. So, Siddhant, are you able to unmute yourself? Yeah.
Yeah, hi. Thank you. Thank you so much, Shwamia, for giving me the opportunity to moderate today's session. Firstly, a very warm welcome, Arup sir, for coming and taking out your time for us, for educating us, for the recent changes. We see after every few months, there are many changes, many recommendations that comes up. So coming to today's topic, which is the recommendations in the last that is a 50th GST Council meeting. It's a half century now. There are 50 meetings which has come and 50 sets of recommendations. So we would be very much, it would be a blessing for you to learn from you the changes. I would like to introduce today's speaker formally. Arup sir is a FCA, ACS, and a CISA with more than 2 decades of experience, and he is based out of our city of Joy, Kolkata. He has a hands-on experience in providing opinion and advisory service on indirect tax matters. He was a co-opted member of IDTC EIRC for the financial year 2019-20. His articles has more than 2 million views all over online websites. He has trained students, professionals, senior government officers, professional bodies, trade bodies on GST and other indirect tax matters. He is also a faculty on GST with ICAI, as well as NACIN and many other leading universities. A very warm welcome to you, sir, for coming and taking the session. So I hand over to you to please initiate today's session on the recommendations made by GST Council. Thank you, sir.
Thank you. Thank you, Siddhanji. Thank you, Shubham, and thank you, Tarunji. I think I can see Shakshi also here. So thank you, everyone, and especially ACAE, STAR, and IFTP for this wonderful opportunity. So since it's a Saturday evening and it's already 4, I think I'll carry on the proceeding fast. So I'll just share my presentation. First of all, I would like to really congratulate the entire team of ACAE and STAR and AFT for holding this wonderful series. It was really, I should say, really enriching for all of us. So many new angles have come up. So, yeah. So, as Siddhanti has rightly pointed, having 50 meetings is a very important milestone in anybody's life. So, GST Council meeting has actually reached that milestone. And in fact, this council meeting has been a relief to many of us who were fighting some of the show cause notices against which, there were many representations being made for maybe last 6 to 7 months, but things were not moving. And we were seeing the show cause notices coming in, even adjudication was happening. We were going in appeal. So finally, this GST Council meeting, they took a lot of strong decisions, and kind of clarified things, which, are going to make life easier for us. So I'll take you through some of the discussions and decisions that have happened in the GST Council meeting during the 50th GST Council meeting. So this is a standard disclaimer, this is just for sharing of knowledge. Neither the host, nor me may subscribe to all the values, all the views shared herein. And please do have a legal validation before you take a decision based on this. Thanks to ACAE, STAR, and AFTP once again. So I'll start quickly with the first, major thing that I think that has come up is with ISD was this cross charge. So what is ISD and what is this cross charge? Why so much of air? Why is that there? Why is this so much of confusion? Thing is that many of the taxpayers, even though they were fitting into the ISD framework, wherein they are receiving common input services at a particular place, say at a head office, and they were distributing the ITCs, to the different branches. They were doing it through issuance of tax invoice. In some quarters of the country, this was thought to be a wrong practice. Though Section 20 and Rule 39 did not envisage, that it is mandatory that you have to have a ISD framework registration. You can also go through the issuance of the tax invoice from the head office to the branch office. Some show cause notices were being issued saying that ITC to the branch offices would be ineligible because the tax invoices were itself not valid. So now the circular has come in, which, the circular 199, which clarifies certain positions. So I'll quickly take you through a case study. So what is a case study? It's about a company which is receiving audit services from its auditors. Auditors are also branching 7 other branches in 7 other states, which are also registered. They're distinct persons. The auditor raises a single bill on the HO for the entire audit. Okay. And then the HO kind of raises tax invoices to the different branches for their share of audit fees. Okay. So the first question that comes into the mind is whether ISD is compulsory or not. See, if you see the FAQ that was released on IT and ITES services, okay, or also in the banking sector, it was clearly mentioned that HO which is receiving common inputs, okay, from third parties, they can always issue a tax invoice to the branches for transfer of the credit. That is one mechanism that was suggested in the FAQ issued by CBIs. So following that particular FAQ and also the language in section 20 and rule 39, there is no kind of restriction saying that it is mandatory that ISD registration has to be compulsorily taken. The second challenge that we were mainly facing is regarding the HSL. See, when I am receiving the audit services, I'm getting it in a particular HSL. But if I am going to say raise this, tax invoice, what is the particular HSL that I'll raise? So I was raising tax invoice in the sense of support services, stewardship services, management function services, and that is the view that department is taking, that this is not the service that is being provided. They have received audit services. And so if you are raising an invoice for management services or stewardship services, that means you are raising an invoice for which there is no service that has been provided by you. And that's why ITC will not be availed, because conditions of section 16 is not followed because you have used a wrong HSL, right? And next thing that was in support of the taxpayers who have actually issued a tax invoice to the branches for distributing the common credit is the explanation, the third explanation that is inserted from 1st February 2019 in explanation 16.2b. What does it say? What does it say? It gives legitimacy to the bill to ship to model in case of services. We all know about bill to ship to in goods, right? Like wherein under section 10.1b, at the instruction of one person, you are supplying the goods to another person and you're billing to the person who's given the instruction. So similarly, in case of services, this clarity was brought in by inserting an explanation to section 16.2b, wherein it said that the person who is giving the instruction, he can give an instruction that please supply the services to this other third person, and that it will be deemed that the services have been received by the person giving the instructions. So by dint of this, insertion, it makes our ground even more stronger that the taxpayers who had issued the tax invoices, to the branches, they were legal. So now the thing that has come up in the particular clarification is that till the date of the circular, that is 17th July 2023, even if you have issued tax invoice and have not gone on the ISD model, wherein you are taking all the credit, all the tax invoice in the name of the input service distributor, and then distributed it to all the branch offices, even if you have not done that, the tax invoices are equally valid and the ITC cannot be treated to be ineligible. Okay. So the next question is that whether XYZ can raise invoice on the branches for recovering the audit fees. That's what I've tried to explain right now, that yes, till the issuance of the circular, that is 17th of July, you can well do it. You can issue the invoice on the branches for recovering the audit fees or security charges printing expression charges, IT expenses, whatever it may be, and the branches can also avail the credit. But please do remember there is a 0.5 here that I've added, which is way forward. What happens after the date the circular is issued? It has been clearly mentioned in the circular that post the issuance of the circular, going prospective, they have said in the circular that prospectively ISD shall become compulsory wherever a common credit is taken from a third party. Please do appreciate that the ITC you're distributing is for the credit that is being taken from a third party and is being distributed to the branches that you have, the distinct persons that you have. So now I'll go to the second set of the circular, which is saying about the internally generated cost that you are distributing to your branches. So we all know about Columbia Asia. There was a huge uproar. There were huge litigations coming in. We got show cause notices that why you are not distributing your, the management fees, the salary of the top management, why that is not being distributed. But anyways, there are a lot of confusions. But today, now this circular has put all those confusions to rest. So what are they saying? First, they have taken the situation that, I'll just give you this example wherein the HO of a company, it's a system IT company is providing IT support services to its branches. So HO raises the IT support invoices on the branch office. First question is whether issuance of invoice is compulsory where full credit can be availed by branch office. It's a welcome clarification that has come, which says where the full credit can be availed by the branch office, by the distinct person who's my related, who is my distinct person, if they can avail, the full credit, okay, in that case, I don't need to issue an invoice. And why do I say so? Because in the circular, the question is that even if they issue an invoice with nil, whether it is valid or not, transaction value is valid or not. So why is the condition given that where full credit is availed, can be availed by the branch office? Please appreciate that the second provision to Rule 28 says if the credit can be availed by the related party, the other distinct person or the related party in full, then whatever is the value that is being given whatever is the value that is agreed between both of them, that will be the transaction value. So a clarification is given here that in case of internally generated costs, even if, say, this IT function, even if the HO does not bill, please remember, it's in case of internally generated expenses only. So even if the HO does not bill to the branch office for the IT services provided by its own employees, in that case, it will not be a non-compliance. Second question is, what would be the valuation? So here, it is clearly shared that since second provision to Rule 28 is applicable, whatever is the valuation agreed between the HO and the branch office for the IT services, they will be considered to the transaction value and there cannot be any dispute as regards that. Third, whether employee cost has to be included in the valuation. Again, a welcome move which says no. The employee cost, if any, say the IT services which I am providing, maybe I am recovering the cost for the internet service provider that the payment I'm making to the ISP. Maybe I'm recovering some of the hardware costs. Maybe I'm recovering some of the rentals for the servers and things like that, routers, etc. But I don't need to recover. I don't need to recover the employee cost of my IT team. That has also been clarified here. That in case of internally generated expenses, which are being charged, or given as a cross charge to other branch, in that case, please do remember that employee cost need not be added. What will happen if full ITC cannot be availed by the branch office? This is a very interesting thing that needs to be seen because in the present circular, this area is not covered. That what will happen if full ITC cannot be availed by branch office? But in my personal view, the opinion that I have given till now, that if the ITC cannot be fully availed by the branch office. Why the ITC cannot be fully availed by the branch office? Because maybe it's doing an exempt supply and a taxable supply together. And so it is bound by law to reverse the ITC that it needs to reverse for the exempt supplies made by. So in that case, since it is not eligible to avail the entire ITC, So in that case, they'll have to go for a fair value, which will be the open market value. That needs to be checked. If the value that is agreed upon is not the open market value, maybe the valuation needs to be done as per the rules, residual rules that are there to check. Either cost plus 10% can be taken, and the valuation may be done. But interestingly, the clarification in this particular area is not given, and so I think we have to go by the general parlance. But having said that, in a webinar that we have done yesterday, there was a question raised that what happens if I am actually not cross-charging something which is internally generated, but something which I am taking from a third party. So if you're taking something from a third party and you're cross-charging that particular amount to your branch office, then what you need to do is you need to go by the earlier example. That is, in that case, ISD will become compulsory. So this much on ISD versus cross-charge. So as we understand, the clarity that has been brought in is that if you are getting a common cost, common ITC at one particular place, and you are trying to distribute the ITC, then ISD is compulsory. If you are getting internally generated cost, then you have to go for cross-charge. And even if you're not raising a bill, it will be considered that the open market value is nil, so that's a no invoice has been raised. There is no issue. And third thing, if you are availing any supply for any particular branch, in that case, cross-charge will be compulsory. So suppose a branch in Chennai, they get a stock audit in Kolkata. Now, the Kolkata firm of the CA of the Chennai head office, the Kolkata-based branch of the Chennai-based head office of the CA firm, they carry out the stock audit. And after the stock audit report is given to the Chennai head office. Chennai head office issues the report to the bank. So in this case, there will be a cross-charge by Calcutta office for the services rendered by it to the Chennai office. So that's something again there, which is again, a service that is being specifically provided there. Now here again, the second proviso to Rule 28 will be applicable. So the valuation will be the value that is agreed between both the parties, and that will be considered to be the transaction value will be considered to be the open market value. Now, going into another important area, which is having a lot of litigation, is on warranty. So on this, the automobile companies, the white good companies, like the TV, fridge, washing machine, mobiles, they have been receiving some show cause notices. So what are the grounds for show cause notices? We'll just see it through the deliberation in the case study itself. So it's a TV company which is giving a 1-year warranty on its television sold to customers, and the customer who is going to the showroom, they can buy extended warranty of 2 years at a cost of 3,000. Now this extended warranty can be bought either at the time of purchase or maybe at a later point of time, maybe 3 months down the line, 1 year after that. Whenever you want to do it, you can do it. So the first question that comes here is, if Jisung TV replaces the defective goods to the consumers during warranty period without any consideration, what would be the impact? So the allegation here that was being brought by the revenue is that, sir, suppose in a TV there is a spare part that is, defective. So you're giving that spare part to the particular consumer and you're not charging anything. So in that case, even though you are not charging, since you are not charging anything, so it becomes an exempt supply for you. Okay? It becomes an exempt supply for you. So since it is an exempt supply for you, ITC to that extent needs to be reversed under Rule 42. So this was the allegation that was being raised. Show cause notices were being issued. Huge show cause notices were being issued, and we were fighting against them while also giving in representations against this. So now what the circular is saying? The circular is saying that during the warranty period, if you are replacing any goods, defective goods to the consumers, okay, so even if you're not charging any consideration, it will not be treated as an exempt supply. Why? Because it's a commercial decision. Where did I include the cost of that particular spare parts? When I'm calculating the cost of my television, I've already included the cost for the free 1-year warranty that I'm giving. And so it cannot be said that the warranty that has been given, the goods that have been given during the warranty period, that is free of cost. Why? Because the consideration and a huge case study was already made. A lot of research, a lot of data was being shared by was shared to the revenue by the industry, that this is the kind of this is the kind of cost sheets that we arrive at, and so the warranty cost is already included. Even our accounting standards, the different accounting principles, they say that we need to provide for the warranty that needs to be provided. So it's an assumed cost. It's a known, it's a cost that needs to be taken into consideration from all the angles. So because of that, now the clarification is that all these free goods, they will not be treated as exempt goods. And so even though no consideration is received, no ITC reversal is required to be made by the manufacturer. Second question, will the distributor carrying out the repair have any GST liability in the above situation? So what is typically happening? Jisung TV has sold it through a distributor, and the distributor is, say, maintaining the service center across the state, right? So the distributor is actually replacing these goods, right? Free goods. So since he is giving it, he is carrying out the repair, on behalf of the manufacturer. So will he have any liability? No. Why? Because the material, whatever is the defective goods, that is already being, replaced by the manufacturer. So in this case, even though he is also not getting any consideration since he's not getting any consideration from the customer, and he's just replacing it. So that in this case, there will be no service, no supply that is being made by the distributor to the manufacturer or to the consumer. Okay. So now the third question is, what is the impact if the distributor uses, this is the important thing, what is if the distributor uses his own stock or purchases from a third party and charges consideration for parts to Jisung TV? So what is happening? I have bought certain spare parts, okay, from Jisung TV, the manufacturers, and I have bought it because I run a service center, and in the service center I sell all these goods, and when I sell it to people who are bringing the televisions outside the warranty period, so I sell the spare parts to them and I recover the GST from them. So now the distributor is actually using his own stock, or he's also purchasing from the third parties, okay, the spare parts. And for this, he is charging a consideration for these parts to Jisung TV. So please bear in mind that in this case, GST will be applicable. Why? Because there is a supply that is being made. The stock, the distributor is using his own stock, okay, or he's buying something from the market, and he is charging a consideration for the same from the manufacturer, and the manufacturer is paying the same to him. So in this case, GST will be applicable. Now going to case study 4. Question number 4. If the service center of the distributor raises a request for replacement to the manufacturer, okay, so this is again a very interesting situation. So what happens? You have bought a new mobile phone, you have gone to the service center, and the service center says, sir, your display, this display is not available in the entire state of West Bengal. We are trying to procure it from Chennai because the manufacturing unit is based in Chennai. So I will be putting a replacement request to my manufacturer, and I expect a 7-day time lag for the thing to come. So in this case, what happens? The distributor request there is a software through which they put in the request replacement that this particular display is not available. Kindly send a replacement as early as possible because we have to replace it to the customer. And then what happens? The manufacturer provides such parts without charging any consideration, right? So the manufacturer sends the spare parts. They send the display from Chennai. I get the display and I, replace it for the customer. And the defective display, I send it back. The defective display, I send it back to the manufacturer saying that this is the defective display, in place of which the display you had sent, I have replaced. So in this case, wherein a replacement is happening and it is not being treated as a supply. Why? Because they are actually replacing the good product with the defective product and taking back the defective product. So here there is no supply. Because the distributor, he is not getting any consideration either from the customer who is coming to get the replacement or from the manufacturer, for replacing this particular defective goods. So in this case also, please do remember, since there is no consideration, there is no GST liability in case of request for replacement. Coming to question number 5, as Jisung TV could not send so sorry. So in this case, what is happening? I have sent the request for replacement. कि sir, the display is not available. तो मुझे जल्दी भेज दीजिए replacement, नहीं तो मैं उसको आगे जाके लगा नहीं सकता हूँ मोबाइल पे और customer मेरे पे चिल्ला रहा है. So that is the kind of communication that happens. I am calling my Chennai manufacturer's office and telling him to send. But what he is telling is that, sir, I can't send any replacement right now. ठीक है ना? So you are selling ABC mobile. So if you have any spare parts of EFG mobile, दूसरे मोबाइल का कुछ spare parts है, उसको आप लगा दो, उसका काम हो जाएगा. If it can work, if it can give the same kind of service, then kindly put in the spare parts of any other mobile phone and make the customer, get rid of the customer to do it. So what the distributor normally does is that he replaces this part. He replaces this part either for some other phone, it happens, then that's a different thing that goes into that consideration. But if it so happens that the distributor replaces the spare parts from his own for the particular mobile. So say I am selling this Jisung TV and I have some stock of spare parts of Jisung TV and I am replacing it from my stock because the request that I've sent to the manufacturer, they can't send me any stock as a replacement. So when I am doing this, but at the same time, I don't want to raise any invoice on Jisung TV because I don't want any kind of, that I'll raise an invoice for that one spare parts and then, the money will have to come or some kind of adjustments to be done. So I don't want to get into all these complications. So in any case where the distributor is using his spare parts from his own stock, if the distributor does not want to raise the bill, the circular clarifies that the manufacturer can also issue a credit note. Why? Because he can always say that it's a defective goods. This replacement is towards defective goods. So the spare parts that he had earlier sent was defective actually. And so the defect, because what the distributor is ideally doing, he's taking the defective goods from the customer and giving a good part, right? So the manufacturer is considering that they have supplied a defective good to the distributor, and that's why they're issuing the credit. Is credit note with this credit note issue also, there are a lot of complications happening, saying that why for, there is a term in the electronic industry which is DOA, so defective on arrival. So why on this defective on arrival, how can the manufacturer issue a credit note? Okay, it cannot, no, it can issue, they was of the view that only on defective on arrival, that is the entire phone is not working, which is known as defective on arrival. Only on defective on arrival or DOA, you can issue a credit note. You cannot issue a credit note for spare parts. That was the view taken by revenue. So in order to clarify that, even for spare parts replacement, if the replacement has been done by the distributor, the manufacturer can issue a credit note. Now coming to the 6th question, which is, if the extended warranty at the time of buying of the TV is sold by Jisung TV directly at the time of sale of TV, then what happens? So it will be considered to be a composite supply. Okay, so the rate applicable to the TV, because that is the main supply and this is the other supply which is being made, that will be a supply. And what is important is here it will be treated that the supply is made directly by the manufacturer. So I am buying it from a retail store. I am making the payment at the retail store. But if the extended warranty is provided by the manufacturer and I'm buying it along with the purchase of the TV, it is to be deemed that the extended warranty is a contract that is entered between the manufacturer and the consumer. And so the supply will be considered between the manufacturer and the consumer and not between the retail store owner and the consumer. Okay. Second part, what would be the impact? So what happens in the earlier question is, what was the allegation? What was the hardship that was being faced? The distributors, they were being, show caused as to why you are not leaving, the GST and things like why it is not happening. So, the contract, I have made the payment to you. So why is it that, they are raising the invoice and things like that. So in order to clear that air, that since at the time of sale of the equipment, if you are buying the extended warranty, then the agreement is with the manufacturer. But if you are buying, seventh question, if you are buying the extended warranty later on, maybe 6 months after the sale, from the shop owner, the retail store, or from some service center, then it will be treated that service center, that retail store, or if you are buying it directly from the manufacturer online, then it will be treated that you are doing the agreement with that particular person. So the supply, even if the extended warranty is provided by the manufacturer, extended warranty is provided by the manufacturer, the liability of paying the GST will be on the person who is selling this extended warranty and not the manufacturer. So now with this, we come to the third clarification, which is again a matter of dispute. What is the dispute? So there are multiple e-commerce operators in a particular transaction. Okay. And so what was happening? It was being told that all the e-commerce operators, they have to deduct TCS. So as we all know, under section 52, TCS has to be deducted by the e-commerce operator who is making payment to the supplier of the services, right? So sorry. So here what was happening is notices were being issued in case of multiple units. So I'll just take you through an example so that it becomes clear, easier for us. So what is happening here? The buyer, you are a tourist, so you want to travel to a particular place, you want to book a hotel. So what do? You go to Trivago. Now, what does Trivago do? Trivago checks that in which other travel portal that particular hotel is giving the best price. And then Trivago finds out that MMT is actually giving the best price for that particular hotel on that particular day or time. So Trivago connects with MMT. MMT in turn connects with the hotel beach, and they get the rates that, okay, these rates are confirmed and those things are there. So finally, there is an agreement between all four of them. So the buyer agrees with Trivago to pay the price for the hotel, and the buyer is not aware that there is another supplier side eco, which is the MMT, which is doing it, and MMT is again entering into a contract with Hotel Beach, what a Hotel Beach resort or something like that. So in this case, what was happening? Trivago was asked that why don't you deduct? Why are you not deducting TCS from MMT? Because they are making payment to a supplier under e-commerce, right? And MMT was always deducting, the TCS from the hotel because they were the ultimate suppliers of the particular service. So now through Circular 194, it has been clarified that the buyer will pay the booking amount to the supplier side buyer side eco. So Trivago is the e-commerce operator of the buyer. So the e-commerce operator of the buyer will deduct the charges and pay to MMT. MMT in turn will deduct the charges and TCS and pay to Hotel Beach. And Hotel Beach gets the booking amount net of TCS and the charges that have been deducted by Trivago and MMT. So this clarification is a lifesaver for many of the e-commerce operators who were facing the hardship of notice for non-deduction of TCS. They were having huge liabilities. And through this clarification, this becomes further clear that you don't need to worry, even if you are the buyer side e-commerce operator and you have not deducted the TCS from the supplier side e-commerce operator, which is the MMT in this case. What would be the other situation? Where the supply is not made by the third party, rather it is made by the supplier side e-commerce operator. So as you all know, e-commerce operator is someone who manages or operates a portal, right? Is providing the service of goods through a particular portal. So here what happens? Customer, they go and pay, they want to buy insurance, travel insurance. So he goes and pays insurance charges and he goes to Trivago again. Trivago goes to all these different insurance e-commerce operator and finds out that Swift Insurance, they are providing one of the best insurance policies which is suitable to this particular customer, right? So what do? In this case, they are directly Trivago, in this case, the customer pays to Trivago. And in this case, since the supply is going to be made by the supplier side e-commerce operator. He is a supplier side e-commerce operator who is getting the insurance policy issued. So in this case, Trivago will have a liability. Trivago will have a liability to deduct TCS, tax collected, so GST TCS from Swift Insurance while making payment to them. Why? Because the ultimate we have to understand and appreciate that under GST laws, TCS will be deducted from the last person who is making the supply, to the recipient. So here, since Swift Insurance is selling the travel insurance, they will be the persons from whom the TCS will be deducted, and it will be Trivago, the supplier side e-commerce operator, who will be deducting the TCS and charges and then making the payment to the insurance e-commerce operator. So with this, we come to another interesting area, another interesting litigation. So many of my friends in the audience, they may be thinking that, how can this happen? That holding of securities of a subsidiary company can be treated as supply. But please don't be surprised. In a particular state, the state tax authorities, they have held this view that if a particular item or a particular kind of goods or service, it is mentioned in the classification list as taxable, then we can go by that. So what was the genesis of all this? The genesis is that the holding company, say in Germany, they are holding the shares of a subsidiary in, say, India. Okay. So what was the allegation in this case? It was said that the holding company is providing a service under HSN 997171. And what is that service? Services provided by holding companies. That is holding securities of or other equity interest in companies and enterprises for the purpose of owning a controlling interest. So the view was that this service directly hits at the holding company in Germany, which is holding the shares of the subsidiary company in India, and therefore the subsidiary company in India, they are bound and obligated to pay tax under the reverse charge mechanism. Why? Because it is import of services. Now, why is it service? Because it is not goods. And what is the definition of service? Anything other than goods is service. So if you go by the definition of 2 subclause 52 and 2 subclause 102, which defines services, it is squarely falling under the definition of services because it is anything other than goods. But the word securities, that was being missed. What is the definition of security as per section 2R of the Securities Regulation Act? So that angle was missed. Apart from that, isn't it that for levy, we need to see that whether it is falling within the 4 corners of the definition of supply. Supply has been very widely covered. So how does the levy section, how does it happen that section 7, where does it say that holding of securities in a subsidiary is a supply? It is nowhere there. Right? Then after a lot of show cause notices were being issued, huge demand were being raised, representations were being made to the council saying that, sir, if this is the case, then every company, why only foreign companies? All the Indian companies who are holding shares in the security services, they are providing a service. Then, even to a larger extent, we had taken an argument in a particular matter that if that be the case, then every person who is holding shares in a particular company, that person is also kind of providing a service to that particular company. So finally, we were lucky to have this wonderful welcome clarification where it is said that purely because a holding company holds the shares in a subsidiary company, it will not be treated as a service. Okay, and there will be no tax either under the forward charge if the holding company is in India or under the reverse charge if the holding company is based out of India by this. But friends, please appreciate what is the important legal principle that we can take from this particular, dispute that has occurred. That is, we need to appreciate and understand that even in many forums wherein we are discussing, maybe we share that, this is taxable because it is there in the, the classification for taxable items. It is there under 18%. So therefore it is taxable. We need to understand that it needs to fall within the definition of supply. Then it needs to come under the levy. Then if it is not exempted, then tax is payable. Okay. So just because it is there in the classification of goods or services, it does not fall within the ambit of levy. That needs to be very clearly held. Now, another question that was interestingly asked in one of the seminars that I've attended on the GST Council recommendations was that, then, sir, what is the situation which is envisaged in HSA 997171? Friends, please try to appreciate. There are restrictions from the COVID period, which says the landlocked countries of India, investors from those countries, they cannot invest in India through the automatic route. Okay, they have to go through the approval route. Now, so this is one thing. So maybe I'm not a person from the landlocked countries, okay, but from a country from where I have restrictions in making investment in another particular country. Say I am staying in a country from where I cannot invest in Dubai. So what do? I am getting hold of a particular investment company in India, and I tell them that I will invest from Malaysia into your company, and you will invest this money in this Dubai company, and you will be a holding company of that particular company. Okay, why? Because I want to have a controlling interest in that company in Dubai, but as per the restrictions in my country, in Malaysia, I'm not allowed to have direct investment in maybe Dubai. Right? So that is the situation that is envisaged in this entry, wherein you are providing the functions of stewardship, management, wherein you are doing this on behalf of somebody else. So services provided by a holding company, holding securities or other equity interests in companies and enterprises for the purpose of owning a controlling interest. So the company in Malaysia, they have engaged you to hold a controlling interest in the company in Dubai. Then that's the time when you are coming within the ambit of this particular entry. So it is not so that this entry does not have any taxability, but we need to appreciate and understand that it is not for all the holding companies who are just holding purely subsidiary companies within the territory of India. Okay, next is another important clarification is regarding the issuance of e-invoices. See, this dispute, why has it come in? What was happening? We had a major doubt. And what was the doubt? The doubt is that the government departments who are deducting TDS, the government departments who are deducting TDS, they cannot be, the regular taxpayers. And so they are not registered persons. So what many people were doing, when they were making supplies to government departments who are deducting TDS, they used to show it as B2C supplies. Okay. And notices were being issued. Sir, this particular department has actually deducted this amount, say TDS, GST TDS on 10 crores. But as per your B2B supplies, you have shown only 2 crores during the year. So where are the remaining 8 crores gone? So when we investigated the matter, we came to know that the taxpayer was showing the supplies that they made the government departments under B2C. Considering that they are not business organizations, right? They thought they took B2B to the literal sense of business to business. Okay, that government department is not carrying out any business. So in that case, how can we show the supplies made to them under B2B? So under the same confusion, what was happening? As we all know, the e-invoice limits, they have come down from to 10 crores And from 10 crores, we are going down to 5 crores from 1st August 2023. So since this has come up, now this clarification is thought to be very important. Why is it so? Because if you are not issuing an invoice, when you are liable to issue e-invoices, then in that case, you are exposing yourself to violation of the the law compliance regarding e-invoices. One part is that it will not be treated as an invoice at all as per Rule 48.4, and so your recipient, if they are eligible to avail credit, they cannot avail the credit, and you are also holding yourself liable to be prosecuted. There will be a penalty for violation of not issuing the invoice but making a supply and not issuing an invoice. And what was the confusion? Where was the confusion going in more? Since you are not treating it as B2B, you are not considering the supplies made to them in your total limit that you need to make for your e-invoice limits. So that's why the government CVIC had to come out with a clarification saying that if you are required to issue invoice under Rule 48.4 for supplies made to government departments registered solely for the purpose of TDS, they have to do it. Okay, so if your threshold limit is above 5 crores and you are making supplies to government departments also, okay, when you're doing it to others, you're raising e-invoice. But if you are making supplies to government departments also, please consider that under B2B, check your threshold limit and start issuing the e-invoice. Otherwise, you are exposing yourself to penalty later. Now coming to the best issue of the day, which is when this GST Council meeting on the 11th July was over and we got the press release. There was a lot of hip hip hooray, a lot of things, a lot of joy, a lot of happiness in all the WhatsApp groups. And what was it regarding? It was regarding 183 circular has been extended to 193. So now we don't need to worry. 31st December 2021, till that date you are safe. You just get a declaration from your supplier or from his chartered accountant or CMA saying that the supplies have been made and there was some mistake and like you have not shown it in your GSTR 1, you have shown a wrong POS or whatever discussions were there. Because Circular 183 said that if there is a mismatch between your 2A and 3B for the year financial year 17-18, 18-19, if it is below 5 lakhs, then you can get a self-certificate from the vendor supplier saying that the supplies have been made and what is the mistake that he made. Whether he didn't show it in one, whether he showed it at a different POS or he showed it under B2C in place of B2B, whatever was the mistake. And they have to show that they have also deposited taxes by filing the GSTR 3. And we thought, in case it was above 5 lakhs, the same thing had to be obtained from a certificate. A certificate had to be obtained from a chartered accountant or a CMA and certifying that supplies in respect of such said invoice of supply have actually been made and the tax of the supplies have been paid by the supplier in form 3B. Now, what has come in 193? In 193, it is being told that whatever was the limit given. So what we know is from 1st April 2019 to 8th October 2019, Rule 36.4 was not in place. So till that date, you can go as you are going for 17-18 and 18-19. So they have to simply give the declaration as per this present format that supplies were made, taxes were paid through 3B, that's it. But what has happened after 9th October 2019 to 31st December 2021, what came out in the circular was really surprising. What came out is that now the vendor, they have to, or the CA has to certify that to the extent of 20% above the amount that has been reflected in 2A, that has been, for that amount, the supplies have actually been made and still the, the payment has been made in 3B, all those declarations have to be given. So effectively what has been made in very brief is that it is unlike 18-19, 17-18, wherein there is a blanket approval on whatever is not appearing in 2A. From 9th October 2019 to 31st December 2021, the relaxation that is given only for the quantum that is given as per Rule 36.4. So for the year 19, that is 9th October 19 to 31st December 19, you get 20%. For the year 20, 1st December to 31st December 20, you get 10%. From 21, 1st December 21 to 31st December 21, you get 5%. That's it. So what is the relief that has been actually given that we are yet to understand? Is it not another way through which Rule 36.4 is tried to be brought into legitimacy? And another major confusion that is arising because of Circular 183 or 193 is, here there is a line written, friends, please pay attention, please appreciate that the tax has been paid by the state supplier. It is returned in form GST or 3B. So what happens if I have received a show cause notice from my department, from my revenue authorities, and I have made the payment of the taxes to DRC 03. So now when my recipient, they are finding a mismatch in the 2A versus 3B, and they are asking for this certificate. Can I give this certificate as per Circular 183 or 193? If you see as per the strict legal interpretation, no. Why? Because it is mentioned that the supplier is in return in form 3B, they have deposited the taxes. So this is one area which needs to be clarified, that even if the supplier has paid through DRC 03, because the revenue is should be interested to the amount of receiving the order, so they have received, that is okay. Another two interesting things in Circular 193 is, one, the certificate has to be obtained tax period wise. I'm not sure, friends, what is the kind of effort the vendor will put in or his professional will put in, that for every return they are going to check, whether the 20%, 10%, 5% ceiling is perfect or not. Okay, so we need to actually see what comes out, because already a lot of representations have again gone against 193 because of these two major confusions. One is, why only 3B? Why can't we say that they have paid through DSCR 03 also, this particular DRC 03? And why for every tax period? Why not for a financial year like we had in Circular 183? Apart from this, another interesting thing which is there in the Circular 193 is Para 7 and Para 8, which, for the benefit of everybody, I'll try to read. I have not put it in the PPT. I'll try to read that. It may be noted that these guidelines are clarificatory in nature and may be applied as per the actual facts and circumstances of each case, and shall not be used in the interpretations of the provisions of law. So indirectly it is being told that this is not to find out or trace whether Rule 36.4 was followed or not. Right? And point number 8 is also very important. These instructions will apply only to ongoing proceedings in scrutiny, audit, investigation for the period 1419 to 31st December 2021, and not to the completed proceedings. So if you have already received a show cause notice and the adjudication order is also done, then in any of these cases, you cannot go back and say, I've got the declarations now, so kindly, take this and rectify the order. Or if your appeal hearings have been completed on the 17th of July, the circular comes, you cannot go back to the officer and say, give me 10 more days. Though this is my third hearing, give me 10 more days, I'll get the declarations as per the circular. So, however, these instructions will apply in those cases during the period 1419 to 31st December 21, where any adjudication or appeal proceedings are still pending. So, if the date of appeal or the adjudication is still there, if it is not complicated, it is not completed, if the orders have not been issued, if the final date for appeal has not been gone, in that case also, we can still go back and tell them that this is the kind of, maybe the hearings have happened, we can still go back and give the declarations. But how far that will be acceptable? Because there is a dichotomy. In one place, we are saying completed proceedings. In another case, we are saying that adjudication and appeal if they are pending. So what happens if the appeal hearings have been concluded on the order is not issued? So what will happen in that case? There is no clarity regarding that. So this is already discussed by Shankarji. He's already discussed it a few minutes back that if I've availed wrong ITC under IGST and I have CGST, SGST, I don't need to check whether IGST balance is there. I can always club all of them and then consider whether interest is payable by me or not, because I was forced by section 49 to first utilize ITC under IGST. So here I had one thing to just address before the forum, that is, this is a wonderful clarification wherein people have taken credit for a issue where there's an interpretation issue. Like in the case of safari retreats, I have availed the credit considering that maybe safari retreats will get a positive favor in the apex code. So I availed the credit, but I'm not utilizing it. But since it is an IGST credit, since it's an IGST credit, I had to utilize it, because without doing that, I cannot go forward and file my returns. So now what was happening, though my total ITC in my electronic credit ledger was more than the ITC that is being availed by me, my ITC under IGST head was lesser. And I was getting worried. I was getting show cause notices saying that how come you can do this and you have availed this, so reverse it from, pay it from your pocket. So all those things that Shankarji was also sharing right now, that all those litigative issues, we have got a maybe leeway, we have got a life here, wherein there are many people who are availing the credit, but not utilizing it, because, 16.4 will again bar you. 16.4 will tomorrow bar you from availing the credit. So that's why one way which many professionals are doing it, they're availing the credit and not utilizing it. And there, this was providing to be a big hitch. Refund related issues. So as you know, 2B and 2A, they are all brought to the same level that we have seen. The value of export goods has to be included in the adjusted total turnover that was not earlier included in the definition. And this is one of the important things that is there for OIDR, my friends who are handling OIDR services. So what is happening? Typically, Netflix is billing to an unregistered person in India, and it had to bill what? It had to bill to the person's full name, PIN code, everything had to be given, whereas that was not being possible. And so now the amendment comes in Rule 46 Clause F, saying that in case the OIDR services which are provided through an ECO, which are provided through through an unregistered person, you don't need to mention the full address. Only the mentioning of the state will do, that will suffice. And as I was sharing this, as Shubham was sharing, there are notifications for amnesty scheme enhancements, they have been extended. So wherever the word 30th June was there, 31st August has been replaced. And so whether it's 99C, GST of 4, the annual return, the final returns, the revocation, all the amnesties have happened. So now if you have still missed the earlier bus, so you have another bus to catch, and you can finish all of them by before 31st August 2023. So thank you very much. So before I close, I would just like to share certain things, a few things, we need to understand that regarding the RCM, there have been some developments that are happening. So in the days to come, the RCM will be payable on the basis of the HSN that is shown by your vendor. Okay. And also, as we all know, in the case of the services, where they are providing services, OIDL are providing to registered persons. Previously, they didn't have to give it, they don't have to give the details of B2B supplies. But in the days to come, they'll give the supplies of B2B also. So if you are receiving a supply and you are not paying taxes under RCM, that may become a challenge in the days to come. Another welcome clarification that has come in the GST Council is about the directors payment. So they have said that only remunerations will be taxable under the reverse charge mechanism, and not any payment and every payment, like rent paid to the director's remuneration, will not be a part of your RCM. So that has been finally taken up by the council. We are still waiting for the clarifications to come. So thank you very much. I rest my case here and over to Siddhant.
Thank you so much, Arup sir, for your time and for an amazingly how you have covered all the amendments that are proposed. So many circulars that have come along with all the amazing examples here. I would like to, is Sakshi in the call? Okay, I would like to
Yes,
ask.
yes, I'm there. I'm there.
Yeah, I would like to ask Sakshi to give a formal vote of thanks to Arup sir.
Thank you so much, Siddhant. Thank you so much, Arup sir. So these plethora of circulars actually came quite recently, and you have deliberated on all of them so well. We have been able to actually, revise through all the circulars by your deliberations. And definitely, as very rightly said by you, ISD versus cross-charge warranty, all these issues were really actually very prevalent, and a lot of taxpayers were very adversely affected by the mechanism, what to follow, whether ISD or cross-charge. And ISD versus cross-charge was like one topic which everybody was very confused about. So the circulars have definitely, as very rightly said by you, brought about a lot of relief to the taxpayers as well as professionals. And of course, sir, it's a pleasure to hear you. Thank you so much for sharing your views and insights. Thank you, sir.
Thank you.
Thank you, Sakshi. Sir, this is a virtual memento that we would like to share to you, sir, as
Thank
a
you.
moment of respect from our end, sir. Thank you so much for coming, sir.
Thank you.
Sir.
Thank you,
Shubham,
everyone.
would you like to say?
Arupda, thank you so much
Thank
for
you.
taking this session in such a short notice. And we thank all the participants also who have been with us for this 10-day certificate course and today's special session. So with your session, Arupda, we will complete our 10-day certificate course. And I would like to inform the participants that the certificates and the presentations and all the video recordings will be shared with them in a day or two with links to all these things. So they will get the certificates and the links maybe by today or by Monday. So is Shubham there? Shubham is
Thank
there.
you so much, Arupda, for sparing your time on such a short notice and enlightening us. I think your PPT is probably the best PPT I have seen the last few days, which has been made in such a wide area you have covered in such a short span of time. And your case studies, which you have made, all of them, I'm sure, would be extremely helpful to all the participants. And it has been explained through a lot of examples, and understanding has been very clear from our end because of that. Thank you so much, Arupda. And thank you to all the participants. Sorry, you were saying something, Arupda.
Thank you very much. I think it was a wonderful opportunity for me also.
Right. And thank you so much, Arupda. It was indeed our pleasure. And thank you to all the participants for making this session so successful, because without your support, I think this would not have been possible, because this requires a lot of dedication to be able to be there for 20 hours plus 1 hour today. This is 21 hours that we have been able to carry out the certificate course. I think seeing everyone here, and maybe we are becoming a regular face, but you are seeing us regularly, me, Tarun Bhaiya, everyone. I think this is something which has become a part of our daily routine now, because we are now feeling that every day we are learning so many new things because of this certificate course happening. So we'll make sure that this learning keeps on happening, because the idea is not to stop this learning ever. We'll want to come up with these kind of courses in the future as well. And we'll also share all the PPTs, all the videos. You can always watch them as per your convenience. And please do share your feedback, because this is third year in a row that we have been able to organize certificate course from the platform of ACA, which is being widely appreciated everywhere. And we hope that this kind of initiatives we are able to carry out with your support in the future as well. So thank you to everyone for making this course extremely successful and joining us on a regular basis, and making this program very interactive by asking so many questions. Thank you to everyone for their unconditional support and love to ACA. Thank you.
I would also like to thank our co-organizers, AIFTP, STAR, and IDTPF for joining hands with us, and also our online partner Tax Guru for joining hands with us in the certificate course. And also a big thanks to all the moderators for these 10 days who have been with us. Siddhant is here with us today, Shakshi, Anup Luharuka ji, Vikas Banka ji, Shubham, Shivani. Am I missing any name?
Where you are missing your own name because you are the most instrumental person in organizing this.
No,
We owe a big thank to you as well.
not at all, not at all. Thank you so much. Thank you. And all the others and at ACAE, all the office bearers, thank you so much. So with this, we can, I think, close this session.
Yeah,
Okay.
sure. Thank you.
Thank you. Thank you, Arupta.